Okay, PricewaterhouseCoopers now has come out with the article talking about the Malaysia now taxing similar to the Thailand system, taxing money that's on a remitted basis. And I'm going to go through the steps with you and explain to you how it works. There are some exemptions on this, but they talked about here, with the boom of high growth in industries driven by technology, many now are able to work remotely under flexible working conditions. As a result, an individual could have many of the sources of income, be it from their home country or from anywhere in the world. And this has also led to an increase in the number of high net worth individuals who are able to earn incomes globally while staying within the comfort of their home. Now, you're going to see more and more of this as time goes on. But as countries have different tax mechanisms when it comes to foreign source income, here are the answers to common questions that you should know so that you can accord the proper tax treatment, for the different tax scenarios. Now, the first one is, let's say that you had heard that your income from overseas is now taxable in Malaysia. Is this true? Well, now, up until January the 1st, 2022, you didn't have to really worry about foreign source income when it comes to filing for your tax returns. However, since January the 1st, 2022, the blanket exemption of foreign source income has been removed. Now, consequently, foreign source income received in Malaysia by a tax resident from outside Malaysia is now taxable in Malaysia unless the specific conditions for exemptions are met. This move by the government of Malaysia was also to meet international best practices Malaysia had committed to adhere to by December the 31st, 2022. In response to the feedback received after the initial announcement, an exemption was granted for Malaysian resident individuals for foreign source income other than any sort of partnership income received in Malaysia from January the 1st, 2022 to December the 31st, 2026. This is subject to meeting the conditions as per what I'm going to go over with you on the next item here. And that is, number 2 is, are there any conditions for resident individuals to qualify for the foreign source income exclusion? Now, qualifying foreign source income is exempt from tax provided the income has been subjected to tax in the country of origin. Foreign source income received from individuals is regarded as having been subject to tax in the country of origin if the following things happen. Income tax or withholding tax on the foreign source income has been paid or is payable, or another condition is tax is not imposed in the country of origin because of these following conditions. For instance, the taxation system of the country of origin. What is that? The next one is the foreign source income of the individual filing before or below the taxable threshold in the country of origin. So it depends on your income, okay? The next option is income that is given as an exemption through a tax incentive. Next option would be in the case of a foreign dividend income, has it been subject to underlying tax? Now, another option is foreign income or foreign dividend income that has been paid from underlying profits arising from operating profits, which have not been subject to tax due to maybe unabsorbed losses or capital allowances or profit arising from capital gains, tax incentives that are in compliance with the country's substance requirements, or tax rules under a tax consolidation regime. You can see how this has gotten a lot more complicated than it was before, okay? There's so many things you're going to have to look at. It depends too, are you already a resident? In what was the year you became that resident? But anyway, I'm going to give you some conclusions to you can get to on the end of this. Now, the third option or third question is any dividends that you receive should be from the profits of an entity. Now, does this mean that the dividend income that you receive has been subject to an underlying tax in the foreign country? Now, unfortunately, this is not significantly, it's not a straightforward issue. Okay, there's kind of a gray area in this. Now, based on clarifications with Malaysian Inland Revenue Board, the foreign dividend must be subject to withholding tax or an underlying tax at the company that is paying the dividend. If no dividend or if no tax is paid at the level of the dividend paying company, the foreign source income exemption may be applicable. I mean, this gets pretty complicated, so you have to look really at your situation. Now, it's going to be challenging for individuals receiving foreign dividend income to ascertain whether or not the income has been duly subject to underlying tax. Given that Malaysia has a self-assessment system, the onus would be on the individual to prove this. As such, it is advisable that detailed reviews are carried out to determine whether or not the foreign source income exemption is applicable. Now, the other question is, your foreign source income, is it exempted? Do you need to declare it on your tax return? Well, the answer to that's yes. Although the foreign source income received in Malaysia is exempted until the 31st of December 2026, the resident individual must still make a declaration in their Malaysian income tax return that the relevant foreign source income qualifies for exemption and retain the required relevant supporting documentation to prove this. For those of you who have submitted your tax returns for year 2022, you may have noticed that a new disclosure section on foreign source income has been included in the return forms for year 2022. Another question too that people have is, did you not remit the foreign source income into Malaysia? Does this count, as income received in Malaysia? Well, presently the tax authorities is clarified that only income that is brought into Malaysia by way of cash or electronic funds transfer is considered as remitted income. If the income is derived or kept overseas, this would not be considered as income received in Malaysia. Now, the other big question that people have is you work, let's say, remotely for an overseas company while physically in Malaysia, and your income is already subject to tax overseas. Is this considered foreign source income? Well, assuming you are exercising employment as you carry out your duties physically in Malaysia, such employment income would be deemed derived from Malaysia, regardless of whether your employer is a Malaysian resident or where the salary is paid or received. Now, the income is, or in relation to the period during which the employment is exercised in Malaysia, would not be regarded as foreign source income and would be subject to tax in Malaysia based on the duration of the employment exercised in Malaysia. Now, although there are exceptions for the short-term employment under the domestic law as well as the tax treaty benefits, these exemptions are not automatically given. A claim has to be made when the income tax return form is submitted, and the individual is required to keep sufficient documents to support the position taken. Assuming that yours is not an employment situation and that you are a freelancer, providing services to overseas clients, while physically residing in Malaysia, this would likely be regarded as business income derived from Malaysia if the work is predominantly carried out in Malaysia. Now, do note that remote working arrangements, be it for overseas employers or as a freelancer with overseas clients, will create issues around personal tax. In a situation where the same employment business income is subject to tax in both countries, further considerations are required on the claim of the tax relief in the form of unilateral or bilateral tax credit on the foreign taxes suffered. Now, given the complex tax issues arising from remote working arrangements, careful prior planning will help to ensure you are compliant with the stringent tax requirements in Malaysia. Anyway, folks, if you want to know more, let's go to our website, www.citizenshipquickly.com, and just ask for some help. I'm going to give you my opinion on this, and that is why pick Malaysia to begin with. You got 21 countries in the world that approximately that don't even have an income tax. You got tons of countries that have pure territorial tax systems like Malaysia used to have, where you could bring the money in, not have to report it, not have to required to file tax returns on it. To me, there's so many better fish in the sea out there. Why pick this one? It's very difficult to get this passport anyway. Why not? If you're going to look at something like a passport and you're looking at remitted income, why not pick Ireland? Ireland's got a lot better passport than Malaysia does. And that's number one. But number two is you can get the passport, in a reasonable, predictable time period, and you don't have to worry about, this hee-hawing around. I would like to hear from you. If you got a question or comment, put it below. And again, don't forget to hit the subscribe button on the right of your screen right here, and you get new videos automatically as they come out. And I look forward to talking to you on the next video. Take care.